As European market has been underperforming since almost mid-May.
Hello Bruno, and it's been about a month since we last saw you, so welcome back to the studio. Let's talk. In that month, the technology sector has started a correction. Is that now over?
Well, hi Jack. Let's look at the technology charts on a daily basis, and what we see is at the beginning of June, in fact, we had a big sharp fall down, and then it has been retesting twice this 54 level, and recently in the last 4 days it's moving nicely up. Momentum is also turning up. Relative strength is also versus the S&P rebounding nicely. Though we still have this big downtrend line, right? And we also have this red line which is at 62% Fibonacci retracement, so a strong resistance area. It needs to go above it to really give a clear signal.
So, however, among US sectors, cyclicals are clearly outperforming the defensive sector. Is this a bull sign?
Yeah, you see that usually we look at the ratio of discretionary XLY versus staples XLP, and this black line is basically saying when it's rising that cyclical outperform defensive, and we see recently it has been moving up. So it is a bullish sign, but let's look to the last 6 months. It still needs to take up the former highs. So here it is positive, but not fully positive.
The rising yield in the US is also a bullish development. How high can they go?
Well, look at these daily charts. We see that in April we were at 215. Again in May, in June, and then suddenly mid-June there are these nice development from 215 to 240. What is 240? 240 is the previous resistances that we had in May. So here probably we are going to have a pause. It's usually what happens on the bond, it respects the resistance and support. So how far low can it go? Possibly toward the cloud to 230. So we are probably in a trailing range between 240 and 230. And that has somehow probably an impact on financials.
And will financials continue to outperform the S&P 500?
I think they will, because the uptrend in the interest rates arena is still established. We see also an uptrend with higher highs and higher lows on the XLF, on the financial sector. We see also relative strength versus the S&P making higher highs and higher lows. So all of that is fine. However, short term, we noticed, similarly to the interest rate, that we have probably a pause close to the former resistance, 25, and it can go to the 38% retracement, 24.60, something like that. And then it will again resume the uptrend.
So is the downtrend in the energy sector not over yet?
It tries, in June it tries 3 times to rebound strongly, and failed. Now it's a 3rd time. We'll see if it will be able to break the downtrend, but it has not been really broken, consistent basis. Hopefully the black line here, which is the price of oil, is making higher lows. The relative strength of the energy sector versus the S&P is trying to bottom here on orange. So we think maybe the 3rd attempt could be the right one. But there is no strong signal yet.
So looking at the S&P 500, what are the key levels that we need to monitor?
Well, when we look at the composite, the S&P 500, what we see is that after a rising wedge, which was broken, we are constructing something which is descending a little bit. This is called, compared to the move up here, kind of a bullish flag. Bullish flag is activated when the downtrend line is broken. It's not yet the case. The level to break that downtrend line is 24.30, so not far from where we are now at 24.25. And of course, we would not like to have the support around 24.05 be broken, because that would open a move to 23.90, something like that.
So now looking at the European market, is that still underperforming the S&P?
As European market has been underperforming since almost mid-May. It has broken even its rising uptrend. Now it tried to rebound, basically. So let's say it is kind of neutral versus the S&P 500, maybe less underperforming, but probably stable, not yet overperforming. Why is it rebounding on a relative strength? Possibly because we are just touching the rising trend line here on the nominal basis, and therefore that makes the level 34, 35 quite important. It should not be broken because that would open a decline toward the clouds, 32,000.
So let's move over to Japan. What is the situation like in Japan?
Japan is a little bit better because if we compare the relative strength versus S&P, it's moving slightly up compared to the slightly down on the relative strength of Euro stocks. But if we look at these last 6 weeks, it has been doing nothing between 19,500 and 20,300. So here we're really waiting for a sign. We hope that this pause has allowed some of the momentum oscillators to come more in a neutral situation and be able to rise again. We hope that the yen here in orange is weakening and that could finally give some boost. But now it's kind of summer doldrum.
And finally, let's look at the emerging markets. Lots of people recommending the emerging markets. Do you agree?
I think we can agree at least that the price pattern is still relatively positive on a relative strength basis. The black line here is rising versus the S&P 500, so that means it's better to be in emerging market than in S&P 500. When we look at the price pattern over the last 4 months, it is true it is a trailing range, but recently in the last 3 weeks it is moving up toward the top of the range. So probably it is good to be in emerging market. We should differentiate though, if we look for example at China, China looks moving from the bottom of the range to the top of the range, but the relative strength is just only recently moving up, so it's probably less bullish, even though now we are at a place at the 50% level on the stochastic where it could move up all the way to 100. So there is some room for improvement there. And finally, if we look at one market on the emerging market which has been crushed down, that was Brazil because of political turmoil in end of May, early June. It has been in the last 4 weeks rebounding, slowly coming to a key resistance level. If it can clear that resistance level, that would be better. Until that point, we probably are still in the kind of global summer doldrum and we have to be patient, but beware not to slip in too much, because if it breaks some key levels, then probably the market will get more active.
Bruno, thank you as always for your expert insights.
You're welcome.
And thank you for watching. Bruno and myself will be back in 2 weeks' time, so see you then.